Hey everyone, happy Thursday, December 14th. It's about 11:40 on the West Coast, and it's time for another market update. Mortgage rates have been on a nice rally over the last month or so, or month plus, since they peaked over 8% in October. And I'm pleased to say that that rally continued this week. If anything, it picked up steam yesterday, so let's get more into that. Going back to last Friday, like we talked about, there was going to be the always important November BLS jobs reports. Like I mentioned in my video last week, we were on a nice rally. Hopefully that didn't ruin the fun, and it kind of did. It came in above expectations. It was supposed to be about 199,000 or 190,000 jobs created, and 199,000 were created. Let's take a closer look at these numbers. So like I said, a 199 created compared to the 190 estimate, but they did do a negative revision of 35,000 to the previous 2 months, which we're all familiar with now. They do that every month. So it'll be interesting to see what November 2023 gets revised to eventually. But keep in mind, this number was increased by 47,000 for returning strike workers. So both film and auto workers were on strike, and them going back to work, made these numbers go higher. And then average earnings were up. Averagely weekly earnings were up quite a bit, and that's because the hours jumped from 34.3 to 34.4. Some of that might be seasonal, obviously. People are going to work longer hours during the holidays, especially in retail, so that's probably where that came from. And then keep in mind, there's two different parts of the BLS job survey. One is the headline number right there, and then there's the household survey where they get the unemployment number from. This is the part that was really, kind of hit the markets negative. Unemployment dropped from 3.9 to 3.7. A lot of people thought maybe we'd tick up to 4 and actually dropped to 3.7. And the math is right here. There was 532,000 people added to the labor force, 747,000 jobs were added. That's why that unemployment number dropped. So overall, that was a negative for us. Like I said, we were in a nice roll. That we didn't have a horrible day, but it definitely lost some of our gains. And then heading into this week, on Tuesday, we got the November CPI, so inflation. Our first look at November inflation. And this came kind of as expected. 0.1% on the month, still 3.1% year over year. The core went up about 0.3% and about 4% year over year. So let's take a closer look at that. And as you can see, like I said, headline, kind of came down from 3.2 to 3.1. Core remained unchanged. Shelter is still causing some issues. Like we'll talk about it. It's coming down, but still not quite at the pace it's coming down in real time. And that's, contributed by rent, owner's equivalent of rent. And then down here, we got some negatives from used cars, which is interesting because used cars, all their metrics are saying that's been coming down. So the fact that it went up in this report is a little interesting. And then motor vehicle insurance went up, like we talked about. It's interesting, they include that in the core, but it's not something that Fed policy can affect. People stealing more cars is not going to be changed with the rate being higher. And then health insurance, they started looking at it a little different year over year. It's helped us, but it's going to start being more of a headwind. And then let's see here. Looking at the core inflation for shelter, like we talked about, we've looked at this chart before. This blue line is the blended rent for CoreLogic. This is including new rents and renewals. As you can see, that's at plus 2.6% year over year. And this yellow line is what we're looking at in the CPI number, the shelter number. So it's coming down. It's down to 6.5 from its peak. But as you can see, it's lagging way behind this blue line. So, if we do the math, and if we basically caught it up to where this blue line is, the core CPI would be closer to 2.3 and not 4, and a lot closer to that 2% goal that the Fed has. So that's something, we can look forward to. We know this is going to continue to go in our favor. That's a positive. If this had a run out of steam, if we had already got all the gains we're going to get out of it, things would look a little bit more dicey. Next thing we got was November PPI. So PPI, again, remember, that is the producer inflation. So this is, CPI is inflation on our side of things. PPI is inflation, producing the goods that we buy. So that actually came in a lot better than expected. That was flat for the month. Year over year, it's down to 0.9%, down from 1.2, and that was actually revised down to that 1.2. And then core is at about 2%. So everything's looking really good on the PPI side, and eventually we should see this kind of, benefit us. Unless they want to just keep making more money, you would figure they're saving money on their margins. Hopefully that gets passed down to the consumer, and you can see how much this has dropped over the last year. All the way above 9, I believe. And now the headline down to 2 or on 0.9 and the core down to 2%. So good for the future. And then yesterday, the big news of the week, we got the Fed rate announcement. So the Fed, month or so, they have their meeting. They decide they're going to hike rates, they're going to pause rates, or they're going to cut rates. As expected, they paused rates. But the really surprising part, the really good part for us was, the press conference afterwards, Chairman Powell was very dovish. He basically admitted that it looks like we're going to do cuts going forward in 2024. The markets reacted really well to that. Let's take a quick look at how the markets are viewing going forward. Now that they came out this press conference, January, now they're showing about 1 in 5, a 19% chance that maybe the Fed starts their first cut at their next meeting, which again, not the odds favorite, but that would be amazing if they did. But now starting in March, where before it was about 35% chance they would cut in March, that's up to 84%. And then going forward from that, you see 100%, 100%, 100%, 100%. Even by May, there's an 80% chance they think they'll cut twice. By June, an 81% chance they've cut 3/4 of points, so either 3 times or multiple cuts in one meeting. So basically, Powell's comments yesterday, that press conference, really triggered a lot of positive feelings in the stock market, in the mortgage bond market, everything that affects our rates. And because of that, initial job claims, real quick. Initial job claims came in a little less than expected today, 202,000, where 221,000 were expected. If it wasn't for that number coming low, we'd probably be rallying a little bit harder than we have been. And then another one real quick, miscellaneous November retail sales were up. This kind of caused everybody off guard. It's supposed to be about a negative 0.1% drop for the month, and it came in at a plus 0.3. So again, the more people spend, more inflation. Again, a little bit of headwind, a little bit of negative news today, but that was overwhelmed by this Fed rate announcement. And so where we are now, last week we were down to 7.05 from over 8%. And just from the last 2 days, I believe, starting yesterday, we're at 7.07 and we're down to 6.62. So in less than 24 hours, we've dropped, over almost a half a point, which is amazing news. It's great to see, the market's finally starting to rally. And really the trigger point was, Fed Chair Powell acknowledging that they're going to do rate cuts. Up until this point, they've been kind of, negative about that, saying, well, we don't know what we're going to do. So them coming out, admitting they're going to do rate hikes or rate cuts in 2024, admitting that they're not going to wait for the core, inflation rate to get down to 2% before they do cuts was another big one. So all really good stuff for us in the mortgage market, all good for real estate, good for borrowers, get those, those payments down. But keep in mind, the lower rates drop, the more people are going to get off the sideline, try to buy houses. So, if you've been on the sidelines, if you're in the process right now might be the time to go. So keep that in mind. If anybody needs anything at all, please don't hesitate to reach out. And let's hope this rally continues and have a great week, everybody.